Welcome to the podcast Selling Real Estate with Kelly Cook, where we will discuss the latest and most relevant business strategies to help you do one thing extremely well: sell more homes. We'll discuss everything from business planning to lead generation and conversion to past client customer service and everything in between. Join us for authentic conversations and nuts and bolts takeaways you can implement into your business today. And now, Selling Real Estate with Kelly Cook.
Hello, everybody, and welcome back. It's another episode of Selling Real Estate with Kelly Cook, and quickly becoming, our subgenre, investing with Kelly Cook. I think that you guys have seen that this is one thing that Kelly is super passionate about. He gets really excited about all things real estate, but I think investments, you can always kind of hear the excitement he has for that in his voice too. So we are revisiting a topic today that we have talked about before. I didn't even say hello to you, Kelly. Hey, Kelly, how you doing?
I was waiting for it. Actually, I wasn't.
Was so excited. I was so excited to get it.
You were so excited.
Today.
Yes.
But,
yeah. How you doing? I'm doing great.
Good.
Back from Orlando. Got some attended an awesome real estate conference. It sounds like. So
yeah.
We're gonna kick this thing off right.
Yeah, absolutely. And like I said, Kelly's really into investment. We could probably start a second podcast all about, the investment strategies and things like that. But today we're going to revisit the BRRRR strategy, which you've probably heard of, right? And Kelly can get into, I always miss at least one of the R's in there, right? But, of the steps in the BRRRR strategy, there's one that is a little bit more challenging, or a couple that are more challenging than the rest. So Kelly will get into all of that today, and kind of what the challenges are right now in this climate that we're in, right? We are still feeling a lot of the effects of the pandemic, whether that's from supply chain issues to contractors being out and sick. I don't know. I mean, this pandemic has put I think every industry into some sort of, struggle. Obviously real estate has been booming. It's been going very well, but new construction, we've seen have issues. We've seen a lot of issues kind of not directly related to the pandemic, but kind of out, ramifications that are coming from it. And I think that plays into investments right now. So Kelly, let's get into it.
Yeah, let's do that. And one of the 4 R's, thought there's 4 R's. Some of you guys that maybe thought it was like 16, like BRRRR, like I'm in Alaska or something, right? Maybe 2 R's. There's 4 R's, okay? And it's an amazing name. I don't even know who made this up, but I should look this up. Who came up with the BRRRR, right? Officially, there's a lot of people who take claim for it, but officially, I don't know. But they're brilliant because it is a phenomenal investment strategy. And you mentioned something, Elizabeth. All the market's doing well. And people out there are making good money if you've been in the business for a while or working very hard, right? But what are you doing with it? Now that you have it, what are you doing with it? And then this is one way you could choose to use your money, right? There could be multiple strategies you have, whether it's in real estate or not, to invest. But one way is the BRRRR strategy. So remember, guys, this stands for buy rehab, right? Rent it out, refinance it, and repeat. Okay. So those are the 4 R's. Now, which one right now is the most difficult to complete or to do? Right now, that would be the rehab part, right? That's the hardest part because of what you just said. COVID has taken out a lot of people being sick. The supply chain issues for materials is ridiculous. I mean, the price has gone up through the roof, right?
Yeah. So inflation alone, yeah.
Yeah, inflation too. So if you have the material, you're paying 10% more anyways, or whatever it is, because of inflation. So this is why this is becoming a very challenging aspect of the strategy. However, it is one that you should still do because it is still working very well. Values are still increasing, and lenders are still refinancing for the right product. They're refinancing on the ARV, the after repair value of what it will be worth when you finish with the repairs, right? So it's a great strategy to have very little capital, if none at all, on the project when you're all done. So, for example, we're doing another one right now, and I won't get into the weeds on this necessarily, but you can always email me. I'll be happy to break it down for you. But the bottom line is, we got such a good deal on the buy side of the property that by the time it's going to be fixed up and the appraisal will come in, we will actually on that 25% or 75% LTV, right, that the bank will give us on the refinance, we will actually end up having a big goose egg, literally zero of our money into the deal. Okay. So what's the ROI on that? I don't know, infinite.
Yeah, I'm like
right? Because
never ending.
Yeah, there's nothing in there, right? Like it's just so. What a great strategy, guys, to be able to own an asset that appreciates. So your net worth on paper, for what that's worth, right, does grow, and that's cool, and that's really cool to see. And there's a lot of things you can do with that net worth, obviously. But what's more important, net worth or cash flow? Well, in this case, you get both. But the answer to that question definitely is cash flow, right? That is the currency. That is the thing that we want to speak with the most in real estate. Cash flow investments. If you have zero of your own money into a deal, that's and your cash flow in just $1, that's a 100% return. That's a 100%, 1 billion%, whatever, infinite, right? Return, because you have nothing in the deal. So in this situation, it all comes down to buying the house right. Now, these are somewhat rare. You got to just be clear about that, right? You got to get in the right situation with the right motivated seller, okay, to find that type of situation. However, even if you do have several $1,000s, several tens of $1,000s left over in a deal, when that refinances and the bank cashes you out, you're still going to be, in many cases on the Spur strategy, in the 20+% ROI for these deals on that money you left in the deal, right? So it's still a phenomenal deal. Again, you just have to have the money or the capital to weather the storm of the most difficult R, which is the rehab. Okay, so let's chat about that for a second. Now, if you're doing a extensive remodel, and by extensive I mean, let's just say it's just you're touching every part of the house inside, right? Maybe not moving walls or you're jackhammering the slab, none of that stuff, right? But you are remodeling the flooring, the walls, the kitchens, the bathrooms, pretty much everything, right? Interior. That's going to take in most markets right now 3 months on average, right? 3 months. So how do you purchase the property? That's very important, right? How do you purchase the property? With what? Like someone else's cash, your cash, a mixture of both, hard money, private financing, or anything of that nature. And then how do you weather the storm to make those payments until the property is done so that you can refinance the property? Now, the cool thing is you want to try to have that lined up. So when the moment your contractor says we're done, you got the appraiser in there the next day with your lender. That's ideal, right? That doesn't always work out that way because of contractors. Yes. However, you can start marketing your property for rent prior to being done with the project. And the cool thing is you can have that lease, the background check ran, the lease agreement approved, ready to start, pretty much on this day, which your contractor is saying is the deadline he'll be done by. And you can start getting income on the property right away before you even have it refinanced. Then at that point, you get that refinance done, appraisal comes in, and again, hopefully you get that cash out deal off the ARV, not the money not the price you bought it for. Okay, so let's talk about that for a second, guys. So there's rate and term refinances. Okay, then there are cash out refinances. Now, obviously, in this situation, you want to do a cash out refi, right? So it's very important that when you do a cash out refi, if there is potentially a good amount of money that will be coming back to you, this is the key. You have to have a deed of trust, either that's from your first lender or your second lender, if you have two, that is large enough to cover the dollar amount you want to get back. That's very key. If you only have, let's say you have a deed of trust or second deed of trust that only is, $50,000 and you're hoping to get $100,000 back, that ain't going to happen because the bank will not give you more than the $50,000 back on that second deed of trust. Okay. At that point. So in order to combat that, you need to make that deed of trust large enough so that when you get the cash out, they're going to pay off that deed of trust, which, hopefully circumvents back to you in some sort of way, right? As the principal of the deal. If that was a little hairy, guys, reach out to me.
I was like, for me, it's a little bit. I was trying to follow.
Yeah, that's the key. And then there's also some keys too, the tricks of the trade too as well, where on that to make sure you can get a cash out refi rate, right? a rate and term rate with the cash out refinance. There are some tricks too, where on a second deed of trust, you can simply record that lien by another private lender or whoever it may be, and that's hopefully borrowing you some money, lending you some money, and basically you can get the term of the rate and term refinance, which will be market based interest rates, right? And there won't be any type of a quarter point or eighth of a point higher charge for a cash out. Okay, that's a little trick too. So some things that you can do with this to make it go even better than it already is on the surface level, but that gets really in depth. And I'd be happy to talk to someone more and more one-on-one personally if they have any more questions. I'm passionate about this. I love it, Elizabeth. So
I know you
please
do.
reach out to me.
Yeah.
Because it just makes all sense in the world. Now here's the downside, right? Let's talk about the downside. Not everything is always rosy. The downside is that in that burst strategy, you have to weather the storm for that 3 months or so while the property's being rehabbed. But also the downside is that your cash flow will be a little less. Naturally, why? Well, because you have less money into the deal, right? You're going to borrow. Your loan will be principal balance will be a little bit higher than it would be as if you just did a regular deal and had a smaller loan, right? And never got that cash back, so to speak. Mm-hmm. So that's the downside. But the good news is it's velocity money, right? The good news is you will have less cash flow on that deal, but you can take that money now that you get back out of the deal and you can use it to buy another deal. Okay. So someone asked me one time, Elizabeth, they said, well, I don't have any other deals lined up. I don't know any deals. I don't have anything lined up ready to go. And so if I did that cash out, I'd get that money back and it would just sit in my account. Well, if that's the case, then maybe you should think about not doing the cash out refi. Guys, this is not a one size fits all, right? Mm-hmm. And if that's the case, then your investment, strategy should be then to just take the return on the money that's in that property right now and get more cash flow, right? For the time being. Okay. Now, unless you do a refinance because rates go way down or market values go way up, and it makes sense to spend the fees on a refinance to do that again, you probably won't be doing a cash out refi again. So you have to make that decision calculating that you probably won't have any deals for a little while. That makes sense in the future. Because if you think, I don't have any deals right now, but I'm searching every day. I'm cold calling. I'm sending letters out. I'm doing whatever I'm doing. Well, if that's the case, then guess what? You're probably going to run into a deal in the next 6 to 12 months. If that's the case, you should probably move forward with the BRRRR strategy and the cash out refi, so you have money on hand when that property does come available, right? Mm-hmm. So, anyways, that we ran through it pretty fast, and the repeat's the best part, right? Just keep doing it. Keep doing it. Try to do 1 or 2 a year. Have a goal in mind that you're going to hold yourself accountable to, or have a coach hold yourself accountable to on the investment side, as well as with your real estate sales. That is the key. So again, guys, just to recap this real fast, we got a deal. In fact, by the way, we found that deal because we were going on a listing appointment for someone who just wanted to sell their house, who contacted us, through one of our lead sources to sell a house. And we just said, look, we'll buy this from you if it's easier, because everybody, especially in Phoenix, should be having that conversation, right? Because Open Door, offer pads, they're out there, right? Everyone knows about that option to some degree. And they said, sure.
Be able to offer them all the options they need.
Yeah.
It goes back to that.
No doubt. Mm-hmm. Absolutely. Convenience was way more important in this situation than money or dollar, net money, net profit. So that being said, we offered them and they said, we'll take it and we can close quickly, and boom. And that was the deal. And so now we're going to be in a situation where we have the contractor lined up, and we have got it rehabbed, and it's going to be great. Now it's going to go a little slower than we thought, right? It's going to be about 3 months. We thought we could do about 2.5, but we're going to be fine when it's all said and done. And rates are still good, and so the refinance will go great. And so we're excited about it. I'm excited about it.
Great.
I hope you guys are too.
Yeah,
because you do the same thing.
Yeah, and like I was saying, it sounds, they break it down into these nice, like BRRR, like it sounds nice and simple, but as you hear Kelly talk about it, to get the most out, it can be simple, I'm sure, if you want to go in kind of blind, but to get really the most out of it, there's a lot of things that Kelly has learned through his experience doing this, through probably talking to other investors as well, to kind of get all of these little, tricks of the trade to make it as effective as possible going into this strategy, right? Where you're going to have a lower amount of risk, or really be able to get the most out of it that you can. So definitely reach out to Kelly if you have any questions. As you can see, he loves talking about it. He loves helping people out with that. So Kelly, where can they reach you?
Yeah, absolutely, guys. info@kellycookhomes.com. Shoot me an email or text or call. You can do my cell at 480-227-2028. Some of you taking advantage of that, which have been great. I will always get back to you.
Yes. And then if, you really decide that you just want to dive right into this investing world and you need to leverage some more people to like handle your regular deals, kind of step out of production, get more into investing, head over to buildyourrealestateteam.com so that you can learn how to do that and spend more time focusing on investing instead of, in production, or at least have a healthy combination of the two.
That's right. That's exactly right. So,
Awesome.
so you know that the commercial says no money down, bad credit, right? I mean, literally, that's what you could do in this situation, right? The
I love those
infomercial at 2 a.m.
Yeah. We help everyone or whatever it is. Yeah.
Exactly.
So, awesome. Well, let us know if you guys have any questions that you want us to answer coming up. I think we've got a few guests lined up in the coming weeks here. So be on the lookout for that. But otherwise, we'll see you guys next week. Kelly, have a good day. We'll see you.
You too, Elizabeth. Thank you.
Welcome to the podcast Selling Real Estate with Kelly Cook, where we will discuss the latest and most relevant business strategies to help you do one thing extremely well: sell more homes. We'll discuss everything from business planning to lead generation and conversion to past client customer service and everything in between. Join us for authentic conversations and nuts and bolts takeaways you can implement into your business today. And now, Selling Real Estate with Kelly Cook.